When we talk about investing, we're always told to focus on the numbers, right? Things like PE ratios, earnings per share, all that stuff on the balance sheet. But what if I told you the single most powerful force in the market isn't a number at all? What if it's the story we tell ourselves about those numbers? Because as we're about to see, a really good story can send a stock to the moon or send it crashing back to Earth, often with zero regard for the actual facts. And that's not just my opinion. This quote from the Nobel Prize winner Daniel Kahneman, this is it. This is the key to understanding why the markets can feel so completely irrational sometimes. It explains why we all get swept up in hype and why even the smartest people out there make investment decisions that, when you look back, seem totally nuts. It's not about the data itself. It's about the story that we wrap around it. So, to really get what we're talking about, let's bring this to life. We're going to follow an investor whose journey might hit a little too close to home for some of us. It perfectly shows just how powerful a good story can be. Now, Kara isn't spending her nights poring over dense financial models. Nope. She's scrolling through social media and she is totally captivated by what she's seeing. Stories about a visionary founder, a revolutionary gene therapy that's going to change medicine forever. The story is simple, it's exciting, and it just feels like she's getting in on the ground floor of something huge. And bam, at first, the story feels totally real. Kara's initial investment just skyrockets. We're talking nearly 200% in just a few weeks. Every single news headline, every post she sees, every green day in her portfolio just confirms what she already believes. The story feels more true than ever. She's not just an investor at this point, she is a true believer. Okay, so what's happening here with Kara? This isn't just some weird investing quirk. This is about how our brains are literally hardwired. We are storytelling animals. It's an instinct that's helped us survive, to make sense of a really complex world. But when you apply that same instinct to the financial markets, well, it can be a massive liability. So why do stories have this incredible power over us? Well, a few reasons. First, they create an immediate emotional connection. You feel that excitement or maybe that fear of missing out, FOMO. Second, they're just easier on our brains. A simple, compelling story is way easier to digest than a 100-page financial report. And finally, you've got social proof, the bandwagon effect. When it feels like everyone you know believes the story, it becomes almost impossible to resist. It takes all the chaos of the market and wraps it up in a neat little package. And this leads us to this huge idea in behavioral economics, the narrative fallacy. It's our brain's automatic and often totally wrong attempt to connect the dots. Like, imagine you see a stock go up 50%. Your brain immediately invents a story for why. Oh, it's because of their new product, even though it could just be random market noise. We oversimplify everything and ignore the massive role of just pure chance. And this quote from Nassim Nicholas Taleb, the guy who really made this concept famous, just nails it. We are drawn to these neat, compact stories instead of the messy, raw truth. Why? Because they make us feel like we understand what's going on, like we're in control. But in reality, we're often just ignoring the randomness and luck that truly drives so much of what happens in the markets. So what do these market stories actually look like? Well, you'll find that whether we're talking about a tech boom or a crypto craze, they often follow a script that's surprisingly predictable. And once you learn to see the plot, you start seeing it absolutely everywhere. Just think about the biggest market manias you've seen. They almost always have the same basic ingredients. You start with a charismatic leader, a visionary CEO who becomes the face of the movement. Then you add a grand vision. They're not just selling a thing, they're changing the world. Mix in the promise of crazy exponential growth, making you feel like you're getting in early. And the cherry on top? Often there's an us versus them angle, which creates this powerful sense of community, like retail investors against the big Wall Street suits. And listen, this is not some new thing caused by the internet. No way. This is a deeply human pattern. From people in the 1600s trading their entire homes for a single tulip bulb, to the dot-com bubble promising a new economy, all the way to the meme stock frenzy of recent years. History is just littered with these narrative-driven bubbles where the story became way more important than the actual asset. And it's not just stories from the history books. We have hard data on this now. Research, like this study here, shows that a powerful story spreading on social media can boost a stock's price. And, significantly, completely separate from how the company is actually doing. In today's world, the story doesn't just explain what the price is doing. The story is the reason for the price action. But here's the problem with stories. They exist in our heads. Reality, on the other hand, well, it exists in the real world.
So what happens when that compelling, beautiful story smacks right into a hard, inconvenient fact?
So let's get back to Kara. Remember that revolutionary gene therapy? Well, it fails its clinical trial, and in a single moment, the entire story she bought into just evaporates. The stock absolutely collapses, wiping out all her gains and then some. The narrative that felt so real just hours before is suddenly exposed for what it was, a fantasy.
Now, let's contrast Kara's approach with someone else, we'll call him Gordon, a more seasoned investor. Gordon heard the exact same exciting story, but he didn't stop there. He actually dug into the data, he looked at the financials, he questioned the hype. While Kara was running on emotion and FOMO, Gordon was running on a disciplined process. He heard the story, but he insisted on verifying it with facts, and that's what saved him from disaster.
So, this all leads to the most important question, right? How can we appreciate a good story without ending up a victim of it? How do we protect ourselves from becoming the main character in our own cautionary tale? All right, let's build a toolkit. Rule number 1 is to be humble. Accept that the future is uncertain and that randomness plays a huge role. Number 2, focus on your process, not the outcome. A solid, repeatable research process is worth way more than one lucky trade. 3, diversify. I mean, really diversify. Never, ever bet the farm on a single story, no matter how good it sounds. And finally, number 4, become a healthy skeptic. Always be asking, okay, what actual data supports this? And maybe even more important, who benefits if I believe this story? And it's so important to remember this is a two-way street. Sometimes the market tells a super pessimistic story, a narrative of pure doom and gloom that pushes a company's stock price way below what it's actually worth. For investors who can see past the fear and focus on the facts, those negative stories can create some of the best opportunities out there. At the end of the day, every stock price is just a number from today multiplied by a story about tomorrow. The next big, compelling narrative is already being written right now on social media and in the headlines. So the question you have to ask yourself isn't if you'll hear the story, you will. The question is, what are you going to do about it? Are you going to buy the story or are you going to buy the business?